So today we're going to be talking about bootstrapping your business. But I do offer these. Consider these funding options instead. So let's get started. My name is Brian Whedon. I'm the CEO and founder of Zen Lending and Consulting. I'm based out of El Paso, Texas. And so I can help anybody in the United States with getting funding for your business. My website is down there, yourzenlender.com. So to get any more information, or you can email me at info@yourzenlender.com. Now, business funding, new businesses in particular need working capital. According to Entrepreneur, in the modern business scenario, funding and fundraising act as a major constituent which supports the growth of a startup. What does that all mean? No money. That usually means no business, and instead it is a hobby. Now, I would like to put it to you this way: if you treat your business like a hobby, it will be as expensive as some of the hobbies. So, bootstrapping, it can mean using profits to grow your business. What happens if you don't have any profits yet? So you just opened your doors and you have no customers in and you have no money available. Then what happens is you end up putting your own money into the business, which might mean that you can't pay your own personal bills, which will definitely impact your consumer credit. And that's what we are trying not to have you do. We want you to have a successful business and a personal credit score that's not supporting both the business and personal credit and your personal ventures as well. So putting your own money into your business is fine if you could afford it. But more likely than not, it's going to take a lot more money than you expected or that you anticipate, and it's going to take a lot longer than you planned for it to take. But a lot of us, even if let's say we do have that money, would you really want to tie up that money into a business, or would you like to use that funding that you have from your personal bank account and have it grow and help it expand to a better situation for your business? So a lot of us do have mortgages. There's tuition for going to college, or for kids and bills and loans, and just to name a few of them. And so plowing your money into your business can make your life a little bit more difficult, stressful, and usually it's unsustainable. So there are some ways you can get around it that then you won't have to do that, but you want to do it early in the business process. So business credit, you've heard me talk about this a couple of times. This is when your credit, this is a credit for your business in your business name that's not connected to you or your social security number. It does take time to build, but it is faster than your personal credit. And if it's built right, it can save you a lot of time. And also save your consumer credit report as well. It does help a lot with that. Business credit starts with the company being legitimate. So here's how to make your business legitimate. Do a DBA or LLC and a DBA, a professional website with email and that matches those domains, a toll-free number and a fax number on 411.com, a professional business address, not a virtual address, if possible. But if you do have to have some sort of virtual address, make sure it is not a PO box or a UPS box. That is a huge red flag. And basically how lenders will look at it is, we want to find out where you can have business meetings. So if you have a PO box, the chances of you having a business meeting at your PO box is not going to happen. It just normally is just not something that we do. Have it be a virtual address instead. We do have a company here in El Paso that can help you out with that. Velocity Office is a company that offers a business address that's near downtown El Paso, so it has a good way of keeping separate from your personal address. And just another note on that, when somebody looks up your business credit, your personal house, your personal address does not show up on that report. That's another benefit of having a virtual address. And make sure that the virtual address is done properly. It's not something that is, that's where I just get my mail from and boom, done. It's a little bit more than that. So another thing, start with a trade credit. True starter credit can give you a net 30 terms. You often will need to buy a few things that you don't need, but the goal of this credit is to buy something and then pay it off so that your credit can grow. So, and also you may need to reapply if you're not accepted. When you really do start with a true starter credit limit or credit account, there's very few things that will get you denied. And so if for some reason something's not set up right, the really good part about having these types of things, just reapply. And then normally you'll be able to get you'll be able to get that taken care of for you and get that loan, that account that you need. So for trade accounts, work with at least 5 vendors who report to at least one credit reporting agency. This is the business credit reporting, not the personal credit. So make sure that you're able to track that as I used it, I paid the business the bill, and then it will show up on your business credit report. 8 vendors is the ideal number, but 5 will do. Here are 3 of them that I like. Monetize your marketplace. Uline is office supplies. Quill is a shipping company that does with a lot of that type of inventory. And even non-reporting trade lines can help you, but it just makes it a little bit more difficult, a little more challenging to get it to report properly. So let's say you got 5 to 8 trade lines reporting. Then you move on to revolving store credit. This is like Walmart and those types of companies. You'll most likely find those stores or those companies are where you're going to find a lot of what you need. So the faster you can get to that level, the better off you are. Now, let's say, for example, you get 10 revolving store credit lines, and they all are reporting to the business credit reporting agencies. That is the key, because without it reporting, then the lenders or the people that do business lending don't really have a good leg to stand on to offer you that type of credit that you're looking for. So after you have about 10 lines of credit, then you're going to move on to fleet credit cards. And these are relatively easy to get. Sometimes you do have to put down like a $500 deposit in some of them, but at the end of the day, the mission's going to be completed, and you're going to be able to grow your credit line that much further, that much easier. And these are all places like the fleet credit lines are BP, Chevron, Shell, and so forth, so on. So now remember, we're building our credit little by little. You got 14 credit cards or credit lines reporting. Then you can move on to the cash credit. And these are from MasterCard, Visas, American Express, Discover, all those good ones that we really want to have in our back pocket. But the big difference between this way of doing it and the consumer side of doing it is that you could actually have a business account and a personal or a consumer account. So that kind of doubles your opportunity to get that much more credit available to you. So now, these are accepted at a lot more places, and good business credit will help you get loans in the future. And at the end of the day, that's what we're trying to get. We're trying to get access to loans or lines of credit that will bring our company, our startup, to that level that we really want to, and making sure that we have the funds to support that type of growth that we are wishing to make our business grow to. Now, number two, angel investors and venture capitalists are another option. And these aren't quite the same thing. Angel investors will typically invest early on to early stages or startup companies in exchange for 20 to 25% return on their investment. Angel investors tend to invest less and will also want less control than venture capitalists tend to want the same. So, venture capitalists or VCs will give money to help build new businesses or new startups, which the VCs believe have both high growth and high risk potential. Remember, the higher the risk, the greater the how do I put this? The greater the money is going to, the more the money is going to cost because of the risk factor. These can be fast-growing companies with an exit strategy already in place. You can they can get up to tens of millions of dollars for investments, networking, and growing your company. Now, this is a gamble on future earnings, and this is why when you deal with venture capitalists, they often look to recover their investments within 3 to 5 years, and so they're very short term, and but they will give you the money that you need if everything seems if it seems legit and all the numbers match. They will also often want to own a piece of your company, if not controlling a controlling stake of it. So beware of that, because the more you give up in the company, the less you have control over your company. And so sometimes people who open up businesses don't want that. That's not going to happen to them. For them, it's just not an opportunity, not an option they want to explore. So you just got to be aware of what they're looking for to make it to see if it's a good fit for you. Now, factoring. This works a lot for like manufacturing companies or people who have a lot of raw material um, in their vicinity to do their work within the company. So the factoring company, what it does is your company gets a percentage of the money from outstanding invoices fronted to you by the company, by the factoring company. The factoring company then goes directly after any company which owes you money and collects on that debt themselves. So, hence, if a debtor owes you the company $2,000 on a 12-month payment basis, you might give the invoice to the factoring company, and you'll get something like, let's say, $1,950 in a week. But what ends up happening is the factoring company would then collect on the full amount from your debtors. Now, one piece of advice here: the contracts must be to a company or the government. Consumers really won't fit into this type of an option for those that do business to consumer type of business. So, but it is an option. This allows you to extend your credit or negotiate long-term payment plans in exchange for other more favorable terms. such as getting a retailer on board with your new company without holding a bunch of what are essentially IOUs for months at a time. So you would go and you would get those contracts ready and everything good, and in order for maybe for you to produce that product to give to those companies, factoring might be a good option for you because you get that money up front, being able to spend that amount of money to produce that said item. So that's a really good option for you. Or if you're an over-the-road trucker, this is a good opportunity for you. I do have an ebook specifically for truckers. So if you're interested in that, want to know more information, just put your email on the in the comments and just put if you're wanting information about trucking, and I'll send that to you. It won't be a problem. So another option is a microloan, which I don't know, which you can't even get from a regular lender. So instead, you get a microloan from a microlender, and let's say Association for Enterprise Opportunity, to find maybe a local microlender that would fit your whatever you're trying to do. You can go to that website, micro entrepreneur enterprise, microenterpriseworks.org, and they'll be able to give you some information on it, finding a microlender that might be able to be a better option for you and all that. You also have the Small Business Administration. Now, one thing that is very important to understand is SBA does not give out loans. The banks give out loans. The SBA just makes sure that the paperwork that is needed is there and regulates a lot of it. So just fair warning, we do SBA loans, but there are a lot of paper. There's a lot of paperwork that goes with it. So, but there are options available. Now, there are different aspects to an SBA loan. They have various cap line loans, loan programs, and the SBA Express. They don't provide the loans, rather the SBA sets the loan guidelines, which I mentioned earlier. It's their lending partners who actually make the loans available to you. And so the SBA offers research grants if you're a company that engages in scientific research and development. Microloans is exactly what it sounds like. So microloans is another option for you. Again, this is through the SBA, so it's very well regulated, and also there's a lot of paper that goes with it. But just note, microloans is exactly that. It's not a lot of money. Still, let's say you only need something like $500 to $35,000. Microloan might be an option for you. We'll just have to see. We just have to see which one works best for you, and then go from there. Bank loans, I'm a big fan of saying that there's money out there, but it's not at your bank, because it takes so much time and documentation and everything to get your bank to actually give you a loan that is not personally guaranteed by you or or what we call a grantor. So does your business need more than a microloan? Then apply for a bank loan for your business. If you can't do that, give me a call. We'll be able to work something out, see if there's another opportunity out there for you. But again, if you offer up, or if you need to provide your social security number, just bet that it is personally guaranteed, and that might not be what you want to be getting out there or wanting to mess with. So in order to get bank loans, be prepared to put up some collateral. And this could be inventory, equipment, real estate, anything that is substantial. And normally it only can be one piece, which means that, again, if you're dealing with collateral, my company can do anything $10,000 or more. what that means is you can't put a couple of computers together, say this is worth $10,000, and we're going to be able to do business. That's the same thing that the bank is going to ask for. They're just wanting to make sure that you can secure your loan using some other means other than the reason why you're getting the loan in the first place. So loans must be paid back on time, or else your business credit score will suffer, and more likely than not, your personal credit score will suffer as well if you provide your personal guarantee. So, of course, you must pay it off promptly, just like a personal credit card or credit loan. If you apply for your Social Security with your Social Security number, then bet that you're going to be personally guaranteeing it somewhere. And then that's not my goal at Zen Lending and Consulting, is to get you from personal guarantees all the way to your business standing on its own 2 feet without your personal guarantee needed. But sometimes, just like in everything else, sometimes it's needed, and you want to make sure that you do it very quickly, and make sure that you get it to that next level to where you're no longer needing to personally guarantee it. Your company credit will be able to support it on its own. So if your business credit card is reporting to the consumer credit agencies, that's a tall tale sign that you have personally guaranteed it, and it is a consumer credit card, not a business credit card. So what ends up happening is you think that it's a business credit card, so you max it out because you can. You can max out business credit cards, and there's no real bad thing that can happen to it. There's no FICO score with it as far as utilization goes. But what ends up happening is you max it out to complete the transaction or to get your business to that next level. And then what ends up happening is, yikes, now your credit score is gone down the tubes, because if you use credit cards over 30%, ideally it's more like 25%, but 30% is the maximum you should use any kind of credit. Then it'll definitely ding your personal credit score to make it that much worse for you. Now, one opportunity or one option for you is crowdfunding, and you might want to try services like Kickstarter. I've bought a couple of things off of Kickstarter that are pretty cool, and it does work for startups. But make sure that you read the fine print, because many crowdfunding platforms make you give all that funding back if you don't make your goal by the end of the campaign. So that would be a bad thing, and want to make sure that you're able to be successful and get you that next level. So Indiegogo has a flexible funding option, and they also crowdfunding platforms will take a percentage of the donations. So just keep that in mind as you're trying to make things work for you. They generally will push to have you deliver on your promises. So make sure that everything is all your T's are crossed, all your I's are dotted, everything is intact before you start your crowdfunding. And because what ends up happening is, if you falter, crowdfunding gets a little bit upset, and it just doesn't look good for you as a startup. So you'll have to actually manufacture what you promised, or do anything else that you're supposed to be doing as a business. Donors can become weary of crowdfunding pitches, so straightforward business might not do as well, but they do tend to work better when donors can personally connect with the product or service. Products which aren't quite on the shelves yet, or artistic endeavors can do well also. Standard widgets which are not going to really change anything are not going to attract the brand ambassadors like you want, or anything like that. So they probably won't do very well wanting to get donors all fired up. It just won't work as well. and they generally require you to give out perks to the donor. So we're going to go deeper into crowdfunding later on. So virtual perks are far easier to manage than physical ones. Don't work more than 5 perk levels. 3 are really pushing it already, because the odds that adds more layers to complexity to your campaign. And at the end of the day, you're just trying to make it as simple as possible, to making that transaction as easy as possible to get your business to that next level. Now, your perks may or may not be considered sales under the Uniform Commercial Code, which is something you have to really look at. This has not been legitimate yet. Litigated yet. So there's a lot of new things coming out there that there's no real rules or regulations or no oversight or anything like that. And that means that if things go awry, or if things don't go as planned, or you're not careful with it, UCC warranties may be attached to your company, which is not a good thing at all. So, such as merchantability, which can it be sold, and the fitness for a particular purpose. So just make sure that what you're selling is legit. Make sure that all your plans are legit. Make sure everything is, all your T's are crossed and all your I's are dotted and everything, and then you shouldn't have any problems. But that's why virtual perks usually don't have any of these issues. It makes it a lot easier to just bypass UCC warranties altogether. Decide how much you want. You'll need crowdfunded, and just be aware that the platforms charge anywhere between 4 and 10%, but they do have funding options that are more costly. So it just depends on which one you pick. And perk levels should increase in value and scarcity. So keep that in mind as well. Crowdfunding campaigns work best if you can invoke at least one of these emotions: urgency, scarcity, novelty, or the cool factor. That's what you're wanting to do. Those work best for those types of platforms. Urgency works because it adds excitement, but don't let donors think that they can give any old time they want. So that's kind of going to be a good niche for you. Now, scarcity works because it adds uniqueness to the factor, and it does help with higher level perks as well. And a lot of people will feel that they must have it. That's what's going to sell it, the must-haves. So now you have the novelty works best because it makes the donor feel special. You want them to feel kind of like they're on the path with you, and that's where you're going to be able to stand out from the competition. And it's always cool to be like, I was with that company when they first came out. Think of it as Microsoft or Dell or one of those types of things. When you're the original funder, when you're the original founder, it kind of means something in the end. And the coolness factor works because it's imparts a social currency. So now, don't be discouraged if you think that your product isn't cool. There's a lot of different products out there that you're just like, wait, what? Hold on, this doesn't make any sense. This shouldn't be the cool factor, but it is. Most memorable recent advertising campaigns come from one of the stoogiest industries around: insurance. So if you think of it that way, just go for it. There are strategies. Always be polite. Put your time, effort, and money into the pitch video, because remember, this is the one time that you have to make it all do it. And don't be greedy. Just ask for what you need. With a cushion of no more than about 25% in funds, you should be fine. And also, your goals should be a mix of pie in the sky and attainable, because donors want to see you succeed. So they're not going to want to push you down or anything, that they want to see you succeed. So push the envelope a little bit and you'll be fine. Unsecured business financing. So these report to the business credit reporting agencies, not your personal credit reporting agencies. You don't need proof of cash flow collateral or to fulfill a time in business requirements. Only pay on what you owe, not like a loan, more like a credit card, and can often get a 0% introductory rate, usually 6 to 18 months. So if that's something that you'd be interested in doing, that's probably the easiest and the best way to do it. It's a lot faster than people think, and it saves you from your personal credit being dinged or being destroyed by trying to use it on your personal side. Lending sources work on behalf of getting you credit cards for you, and they often can get you 5 times what you can without them. So basically what that looks like is look at your highest credit card that you have available, the highest balance, and multiply that by about 5 times, and that's about what you could get using this type of funding sources for you. It can also get low introductory rates. Again, 6 to 18 months, 0% interest, and normal rates after that, 5 to 21% APR with a 20 to 25% for cash advance. So not really all that different from your personal credit cards, but they only report to your business credit reporting and not your business. Not your personal accounts. So it makes it a lot easier to get the things you need without really crunching the numbers and all that. And you get to do it. You get to use it, pay it back, and then reuse it again, and be able to grow your company from there. You get credit with no security assets or collateral. Your lenders also has no collateral to collect in case of default. They don't look or don't care about your cash flow either. All that matters is your personal credit. So you're utilizing your personal credit in such a way that you're jump starting ahead of you getting your business funding that's not connected to your personal credit. Meaning, if you use it and you go over the 30%, your credit's not going to be dinged for it. Now, you do have to have a 650 or higher. It's a lot easier with a 680, but you can get both personal and business credit cards just the same with it. It just depends on factors within your personal credit. Most sources do charge a 9 to 12% success rate. Basically, we don't charge anything up front unless we get you funds, and then the success fee would be anywhere between 10 and 12% was what I normally see. I've seen as high as 15% as well. But you only pay this fee off. You only pay the fee off what you secure. So if you only secure $5,000, the 10 to 12% or whatever it's going to be is off of that funding amount. It's not a set amount, which is really cool because you don't want to really get yourself messed up with being upside down in a deal. All lenders on all loan programs charges fees. You usually have anywhere between 5% and even or higher. Even on an SBA loan, they do charge. So having unsecured business funding at 9 to 12% is not really that too far off the ballpark with these types of things. This program, like most others do, including SBA, will roll into your fee so that you don't have to pay upfront costs. So it makes it a lot easier. You'll be able to get it that much easier. So what does that look like? You need to qualify. You need to qualify credit with no derogatory items reporting. That means no bankruptcies. You should never have a bankruptcy on your credit report showing ever. Don't even. That's not ever going to happen. But even if it's not showing on your credit report, you could get approved. It just takes a lot more finagling, or you have to figure out. It's a lot more work to get it, but you can. Judgments and tax liens must be paid off. No active outstanding collections, and unpaid status, except for we can work with you if you have, let's say, $500 or less, something manageable. We could maybe work with you on that. But again, you want your credit to be as stellar as possible, or get a credit partner and utilize their credit score to get the business funding, to make it best for both worlds. And you can't have any late payments for up to for at least 12 months. Now, balance limit ratios and all existing on existing revolving accounts on your personal credit. The lower the ratio, the higher approval rate. 30% ratio is required, because, yeah, you should never just go. You shouldn't go over 30%, and it's a really hard habit to get out of once you get into that type of a habit. They do look at both the overall percentage and the individual percentage of each account. So if you have a really high, over 30% on one credit card, but 0 on all the others, they're going to look at both and see that you have one that's over 30%. It doesn't really work that way. Credit inquiries are a huge factor, and 6 inquiries in 6 months is way too much. Now, I see this a lot when I'm dealing with new startups, because what they're going to do is they're just going to try and keep on pinging, see if I can get that credit card, see if I get that credit card. What about that one? What about that one? Before you do that, get into a company that does this. Go to yourzenlender.com and let me know that this is what you want to do. We can shop all credit cards and get you the best options out there, and have one inquiry on it instead of the 2, 3, 5, whatever you're going to have on it. It just doesn't look as good, and it's really, really difficult to get out of. So, to recap, every new company needs money. If you have to bootstrap into a program that'll take you from where you're at to where you want to go. If you're going to bootstrap into a program that will guarantee you results and get you off of your personal credit onto your business credit, and build it in such a way that makes it an easy way of doing it. You could start business credit as early as the day you sign up with my company. And so it all depends on where you're at and what you're doing, but ultimately, invest in your company, getting into a program that'll get you business credit, business funding. That's where you're going to be able to bootstrap the least and get the most for your buck. It just happens that way. So don't put your own money at risk, and also don't put your own personal credit at risk by trying to do it on your own. When you decide that you have a company, that you have a business, boom, start from square one and just get everything going that you need to get going. If you have any questions, give me a call. There's a 45-minute, no obligation, no commitment strategy call that I do. So just sign up with that, and then I'll be able to point you in ways that in the direction you need to go, so you can go there. So it makes it so much easier. Consider angel investing or VCs, but please read the fine print and don't give up. And don't give up more of your business than you're comfortable with. Consider invoice factoring if that's something that you have access to. If you're able to do that, and make sure that you get the good offer, the best offers, the best terms, and then also when you do factoring, it'll also help new customers, new clients, be able to get you in the door to work with those types of clients. So consider an SBA loan, microloan, or bank loan, and some are easier to qualify than others. It all depends on what your strength is. It all depends on what your strength is. That's where we're going to be able to take you to the next level. If you decide to go with a company like mine, they're going to be able to see all of your strengths. They're going to see your weaknesses and be able to push you more for your strengths and less on the weaknesses to get you the best opportunities, the best options available. So use business credit cards. Make sure they are true business cards, because there's a lot of people. Remember, the Fair Credit Reporting Act, it does not apply to business credit. And so that being said, just make sure it's a true business credit card, that it's not that you're not personally guaranteeing it. Because if you're personally guaranteeing it, it's reporting to your personal credit, not the business credit. And it does two things. It gives you a false sense of security, that being a business credit card. And another thing that it does is it will mess it up, because you won't be able to use as much as you think you are. And you have that tendency, or you have that opportunity to trip and fall and overuse that credit. And we don't want to do that. Seriously consider crowdfunding if that's something you want to do. We will have something again. Let's do crowdfunding next week. So we'll talk about crowdfunding and what that really means. It's a little bit long, but it'll get you what you need and get you at least some good understanding of it. Be polite to a fault when you deal with crowdfunding, because you are basically asking people to fund your dream. Remember, urgency, scarcity, novelty, or the undefinable cool factor. And so unsecured business financing is another option. You might want to do multiple of these. But whatever you want to do, whatever you're going to try and do, give me a call. My number, 915-228-4891. Email at info@yourzenlender.com. If you're interested, ask the question in the comments. We just want to make sure that you get the best opportunity that you have available, so that you can get the best options to get your business funded. And now's a great time to get to start a business, because everybody across the board got knocked down with COVID-19. So at least in your industry, whatever that industry is, 99%, not a true percentage, but a very high percentage of the entire business world, I guess, is hurting from COVID. So if you're going to get started, let's get started. Give me a call, 915-228-4891. Or you can send me an email, info@yourzenlender.com. With that being said, thank you guys so much for sticking around. If you found this to be interesting, or you got some great tips out of it, make sure you subscribe to my YouTube channel at ZLC_El Paso, or give this Facebook a like. All right. Thank you guys so much. I do appreciate it. And have a happy week.